Comments made on the following paid commercial program are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time.
Welcome to the Money and Wealth Show. On the program this week, a tax tip with David Ingram, moneymercials, and we'll take a look at the upcoming midterm elections in the United States and have an overview of the U.S. economy with our special guest, Steve Forbes. Welcome to the Money and Wealth Show. I'm Sterling Fox, and our special guest this week is the Chairman, CEO, and Editor-in-Chief of Forbes Media. Direct from New York City, it's a real pleasure to welcome Steve Forbes to the program. Mr. Forbes, welcome, sir.
Good to be with you, Sterling. Thank you very much.
It's a pleasure to have you. Now, we caught you on the appearance that you have made here in Canada, in the Vancouver area, on a panel with the Surrey Board of Trade. A jammed house to see you and your fellow panelists. What did you tell your Canadian audience?
Well, we obviously got into the U.S. economy. My fellow panelists talked about China, India, and what's happening in Asia. And the question came up whether the U.S. And the points I made was that the U.S. economy isn't low gear. It is the equivalent of walking pneumonia, not a double dip recession. But I do think that major changes are coming. That with the November elections in the U.S., the midterm congressional elections, I think the Republicans will take both the Senate and the House. There'll be 2 years of turmoil, but it's going to lay the foundations for the U.S. getting back on track again, because right now we are off track. The weak dollar policy of the U.S. is very destructive, not only for Canada and manufacturing, but very much in the U.S. It's hard to get traditional, good, productive investment when you're trashing your own money. Trade has got to get back on track again, reducing trade barriers instead of erecting them. Basic things like that, but I think those good things will come to pass.
The U.S. dollar is a front page news not only on the business section these days, but and also worldwide.
Right.
As Mr. Bernanke and his team see fit to initiate QE2, the second round of the printing of money, with which the government plans to buy U.S. debt. Ultimately, is that not simply an exercise in digging the debt hole deeper?
Well, QE2 should just be reference to a once great ship.
Yes, exactly.
And not this printing of money. Because ultimately, where does the money come from? You can print it, but it's a tax on the American people. When they do these binge spending things called stimulus programs, where does the money come from? Either tax it, borrow it, or print it. It doesn't add to the wealth of the nation. In fact, it detracts from it, removes resources from people who know how to use it to those who manifestly don't know how to use it. And so this latest round, is the 1930s had a name for it, pushing on a string. What they should be examining is, why aren't entrepreneurs putting capital to work? Why aren't the animal spirits vibrant? If they did that, they'd find out. Binge spending, people are very worried about it. Raising taxes, counterproductive. Manifold new regulations on this so-called health care bill, not good for business. So-called financial reform, mucking up the banking system even more, not good for business.
The matter, though, of printing of money and the ultimate pressure, downward pressure that places on the American dollar, what other remedy is there that you wish the Obama administration would consider as seriously as they clearly have with the notion of printing more money?
Well, do the opposite. Take a cue from Bill Clinton. Last I looked, he was a Democrat. He had a strong dollar policy. He recognized from what happened in the Carter years that a weak currency is a political poison. If cheapening your money was the way to wealth, Zimbabwe would own the world today. It does not work. So have a stable dollar policy. Try to get the gold price below $1,000. Gold is as high as it is in anticipation of bad things to come. When business people can trust the currency, they'll make productive investments again. How about a moratorium, say for 100 years, on big tax increases? That too destroys capital, destroys the recovery. This recovery we have is the weakest on record, given the severity of the hit we took in 2008, 2009.
Sure.
Usually when an economy goes, our economy has a sharp downfall, at least initially you get a sharp snapback of 6–8% real growth rates. We're now hovering around 3.5 maybe. And so it is a low gear recovery. And so if they just do basic things, you would see the American economy get back in gear again. There's a lot of entrepreneurs ready to go if they're allowed to, if they're not destroyed by these crazy policies.
Well, we all know that businesses in the United States, and in fact American-owned companies the world over, are sitting on significant amounts of cash. They've streamlined their operations, they've reduced their staffs, they are ready to go. They've got a lot of liquid assets ready to go, and yet they're holding on to that money. What's the key? What's the trigger to get business energized and enthused enough to the point where they're going to start spending that money back into the economy?
Once they see that these anti-business policies and the anti-business attitude in the White House is going to change, which I think will start with those elections. It's one thing for the White House to anticipate it's going to have a rough night on November 2nd. Quite another when the thing it actually hits you. And within the Democrat Party, Democrats are going to be looking to 2012, 2014 and saying, oh my God, my seat's going to be in jeopardy if these crazy policies continue. So I think the support for the destruction we've seen in the last few years is going to change. And after 2012, I think you're going to see a real change, if not before, from pressure from the marketplace on this crazy weak dollar policy. This is just mercantilism. This is just protectionism. We played that game in the 30s. It did not have a happy ending. We did it again in the 70s. Not as bad as the 30s, but a miserable decade. So we've got to get rid of that. And I think that policy will eventually go to the benefit of all of us.
If, as you predict, the House and the Senate are retaken by the Republican Party, as you fervently hope, in a few weeks' time,
I think it's going to happen.
Could that not work, though, to President Obama's advantage, in that now he has this agenda that a lot of people still quite believe in, that will be completely impeded by an unruly negative Congress, and therefore you need to vote for me again for my second term? Could that not have that backlash effect?
Well, Bill Clinton came back from a devastating midterm election in his first term in 1994. He did it by abandoning what he tried to do. He was quite happy to ditch his wife's nationalizing health care. He made some other changes, and he actually ended up, during his time in the White House, reducing the capital gains tax, putting in no new taxes on the internet, and other things that Republicans have been advocating. Now, does this president have that same kind of agility, ability, what we call triangulation, in terms of moving to the center? I'm doubtful. Even though he might try, viscerally, he thinks business is evil. In his own emotions, he thinks profit is plunder. And so it's going to be very hard for him to move to the center. And I'll be blunt about it. I think that's one reason why a lot of his aides have been abandoning the White House. I think he'd never admit it, but I think Rahm Emanuel, his former chief of staff, was fervently thanking the Lord that Mayor Daley of Chicago was stepping down, that he could say, oh, I'm leaving not because of the disastrous president we're having, but I'm running for mayor of Chicago. Was quite happy to flee the White House. So I hope the president will make the change, that he will moderate his socialist policies, but I've seen no sign of it yet.
Interesting stuff. Our guest this week is the chairman and CEO of Forbes Media. Steve Forbes is with us here on the Money and Wealth Show. Lots more to come. Stay with us.
Hi, I'm Larry Ray, President and CEO of American Manganese, Inc. Our project in Arizona is electrolytic manganese. We have a resource of 11 billion pounds, currently trading at $1.40 a pound. Our cost, 44 cents. For more information, go to our site at americanmanganeseinc.com or phone me direct at 604-531-9639.